Good morning, ladies and gentlemen. Welcome to Market Forecast brought to you by Options University. This is Butch Shorek. It's Monday, May 12th, 2014. Access to this video is for informational and educational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as always, do not trade with money you cannot afford to lose. Looking at the last week and seeing what happened during the last week, we see, looking at our indexes, the Dow, the NASDAQ, the S&P 500, and the Russell 2000, that we had an interesting week. What one might consider to be a split market, looking at the Dow, NASDAQ, S&P, and Russell 2000, we see the Dow up 0.4% for the week, up 70 points. NASDAQ down 1.3% for the week, showing us a big loser for the week. S&P 500 down 0.1% for the week, only down 266, and we're basically flat. And then looking at the Russell 2000, leading the pack down 1.9%. So we've got a bit of a split market going with the Dow and the S&P holding their own in this nebulous time of the year as we look at the end of May and sitting here in earnings announcement time. We see interesting things happening with the market. Dow flat for the year, NASDAQ down 2.5%, S&P up 1.6%, and the Russell 2000 down 4.8%, showing us a large difference between the big cap and the small cap stocks in our economy. So with that thought in mind, let's take a look and see what kind of announcements we have as the market tries to sort out which way it wants to go. Will the small caps drag the overall market down, or will the large caps hold up and give us a bit of a summer rally? Remember, this is not the strongest 6 months of the market, so we'll see whether we get some adjustment going into the summer doldrums. As we look forward, looking at our economic announcements for the week, we see that if we look at Monday, we got little or nothing taking place, as we see nothing there of real interest to us. On Tuesday at 8:30, we have retail sales and import and export prices. Business inventory is coming out at 10 o'clock. Looking at Wednesday, we see that housing market index at 10. And then on Thursday, which we get into a little more meat, we see CPI coming out at 8:30, our weekly jobs report coming out at 8:30, Empire State Manufacturing coming out, industrial production at 9:15, Philly Fed survey coming out at 10. So Thursday looks like the big day of the week. And then as we drift into Friday, we see we got housing starts and consumer sentiment coming out on Friday morning as we close out the week of the market. So our big day of the week, of course, is going to be our Thursday day, where we see our biggest impact on the market from our economic announcements. Looking at the SPX for last week, we already saw the end results. Looking at the chart, we see that we definitely have been on a sideways trend here from February all the way through. We certainly at some point could get down to this long-term trend line that we've had sitting here at 1825, as we've been in a consistent uptrend, and then our flattening out in the market is going sideways, or range trading. So far we do have a slight head and shoulders, but nothing to tell us that this thing is pulling back. The 30 is still above the 50, above the 200. So by definition, we probably still have somewhat of a bull market, even though we haven't seen much take place in the market since we got our new highs. And remember, these new highs came begrudgingly, as it was difficult for them to keep climbing. Looking at the last week with a little more detail, we see that as the week went by, we started with the basically the high of the week. We did get actually a little bit higher on Thursday, but couldn't hold it as we had our pullback and bouncing off that 30-50 day range as the market just meanders sideways, trying to determine what it's going to do. Are the large caps going to control the market, or are the small caps going to pull everything back down? Looking at the Dow, one of our large cap indexes with our 30 stocks, we see that we did reach new highs this week, or at least we reached the old highs, as we see the market trying to rally, the Dow holding its own, those 30 stocks showing us good strength. Looking at the NASDAQ, we see a bit of a killing taking place as the market just keeps pulling back to that 200-day moving average. Expect to see it hit again, headed for around 4,000. So far, lower highs and lower lows. NASDAQ not showing us that great strength that we're seeing out of the large caps. And then looking at the Russell 2000, let's take a look at that, which is our biggest loser so far for the year, below that 200-day moving average and looking for new lows coming out of that as the market recapitulates some of those big gains that we had last year. Looking at the VIX, of course, the VIX is low as the market's not showing any great move one way or the other. Not a great deal of fear in the market in this area where we have the Fed backing off on some of its programs, but interest rates still hanging out real low. Looking at the bond market, we had a bit of a rally going in the bond market, sold off a bit this week as we were getting a bit far away from the moving average, but showing some strength in the bond market. Look for higher highs and higher lows for the next bounce up on the bonds as we continue this sideways move into summer. All right, looking at gold, showing us absolutely nothing in a trading range between 122.50 and 127.50. So gold not showing us anything. No great run there because of fear. What kind of volume did we have in this last week? Well, looking at the Spider, our ETF for our SPX, we see that we're basically talking about average volume for the S&P. All right, now let's take a look at the financials, which many times will follow the Dow, and see whether we have a correlation between that. So looking at the financials, we're looking at XLF, our Spider Select Fund. For that, remember, the Dow was at new highs this week, and the financials have not managed to do that. We got a cross from the 30 to the 50, so we're not showing the same strength in the financials that we showed in the rest of the market. As the market pulls back, expect this to pull back even further, heading for that 21.25, which for you bulls, if you think you got a bullish summer coming, might be a new entry point for the XLF. Looking at oil bouncing around and showing us that in fact we don't have the oil chart up here, so one might take a look at that oil chart and see what oil's doing, but oil's giving us no big indication as to where the overall market's going. So with that thought, for those of you that are gold members, stick around for the stocks to watch. For those of you that are not gold members, for more free videos, go to www.optionsuniversity.com/free gold. And with that thought, happy that you're here at Market Forecast. This brought to you by Options University. It'll be brought to you each and every Monday. And this is Butch Shorak. It's Monday, May 12th, 2014. Thank you for being here.